Mom. How's it going?
I'm having a good day, Lindsay. How's your day going?
It's going good, but one of my poor little dogs has a hot spot right on the top of her head, and it's really freaking me out. For our viewers today, if you are watching, I am wearing a brown sweater, but also if you see like dark brown, she's going to be in this episode, and that is just what it is. And you're gonna see belly. If you see a little dark brown spot pop into the bottom, that's belly, but she's not feeling good, so she's gonna be one of two special guests that we have on the episode today.
Definitely. I talked to Patrick this morning and he told me that Belly's going to be fine in a few days. So I love that he's the optimist, the forever optimist. But I was happy to hear that he was feeling good about it. It's a bummer because Belly is new to your family and she's the sweetest little dog. And she is like the most cuddly, just the cutest little thing. So I hate that she has a hot spot, but I am Team Patrick on this. She's going to be much, much better very, very soon. She celebrated her 4th birthday, so that's pretty cool. And she's found a pretty cool home that's going to take great care of her. So anyway, happy. Oh, there's Belly. Belly joined us. She must know we're talking about her. So it's awesome.
She has to know.
All right. Well, yes, Belly is a great guest, but I'm super thrilled to have a really important person to me and join us on the podcast today. Today we have Lisa Melroy, who is a fantastic member of our team joining the podcast. Welcome to the show, Lisa.
Good morning. Thank you for having me. I appreciate it.
Yeah.
Making your
I
debut.
love that.
Look at you.
I know. Woohoo! So, Lisa, for people that don't know you, which I hope everybody who has ever listened to this podcast, you get mentioned more than you know. So they probably know some things about you. But for those that don't, tell them just a little bit about yourself, whatever you want to share.
Okay. My name is Lisa Melroy, obviously. 30 years as a CPA, working in every role that there could possibly be under that title for financial services, as well as a little bit of a stint in non-for-profit. Learned a lot throughout my career. Have worked in independent insurance agents as well as a network, as well as a regional controller that managed the accounting function for multiple independent insurance agencies, and live right outside of Philadelphia and a huge Eagles fan. So go Birds.
Woohoo! Love it.
I got a shout out from Bella.
Oh, that's funny. We always know on a Monday morning if the Eagles, during football season, if the Eagles did good or bad based on like how tired you look, or you're like popping in, you're like, guys, let's go, let's rock this week. We know how the Eagles played without even looking it up, which is so funny. For a while there, I was like, on a Sunday or on like a Monday morning, I would like look it up, and then I was like, I don't need to do this anymore. I'm just gonna join the call, and it's gonna be obvious.
Yeah. Clearly last year was a lot better than this year, but nonetheless, it was a fun season.
Funny. I love it. Well, as I said, if anybody's listening and you've ever done an intro call with me about fractional CFO work, and I mention Lisa and say, trust me, you're trading up, that is the reason why. She's got such a depth of knowledge. Plus, she's super fun to be around, and really, really glad you're on the team. But I'd love today, Lisa, let's talk about something that we've spent a lot of time doing over the last couple of months. I'm sure you think about it in your sleep at this point, but we've built a fair number of budgets for independent insurance agents over the last couple of months. Talk to me about, over time, what are some of the mistakes that people make when budgeting?
Okay, and number one, obviously, is not having one. We all know that it's very important to have a budget, to have a plan, to be able to achieve what it is that you've set out to achieve, your strategic goals. But I have found that probably the number one mistake is being too aggressive with your budget, especially on the top line. I'll never forget, I was young, long time ago, and I was not a part of the due diligence of an agency, but I was part of, right after they got acquired, building their budget to present to the people who purchased them, and had to go to New York City, present the budget. And I basically presented a very what I thought was a realistic budget and said, hey, I went through this. This is what we have, and I think this is what we can achieve. And I basically got told that, hey, Lisa, there's no crying in budgeting. Do you know what that means? I'm thinking, oh, League of Their Own? Like, what are we doing here? And he said, well, I bought a certain amount. You better make sure that I can achieve that amount. And again, it's like not having a knowledge of your foundation so that when you have expectations, you really need to understand if you can get there. Is what you're saying, can it be achievable? And if so, how are we going to go about doing that? And without laying it out in a budget, you don't have a sense of realization or reality of how to get there, or can you get there? So, there's no, as they said, crying in baseball. You got to figure it out. And the best thing to do is have a good foundation so that we can, build on that. So
I couldn't agree more. I'm going to give you a statement that an agency would say, and then I would love to hear how you walk them through maybe creating some realistic parameters around what we're saying. So oftentimes, agency owners, when they think about their goals, they'll give us, I would like to grow by 10% next year. And there's a period at the end of that sentence. If you were building their budget, how would you make sure that's a realistic goal?
So revenue, we have to look at those that are contributing to the growth. So we would start with what producers or what employees within your organization will help grow. We would start with what have they done last year? Does their performance last year indicate that they can achieve that this year? And if not, what changes do you have set in place to allow them to achieve it? So we would take a look at saying, what did they achieve in new business? Were they unvalidated and they're validated and they hit the ground running this year? So that would be a possibility to change it. Do you have new marketing plans that would bring in new referrals or sources of business that you can write that? What does the carrier's appetite look like? What are the rates? Are they strengthening or are they going against you? What type of business are you looking at? So basically really starting with the people that would contribute to that growth, and can they achieve it based on what you currently have in-house, and can we make the investments otherwise to get there?
And in that scenario, given the current marketplace that we're in, where we've been in a hard market and we're moving to a soft market, there's a lot of talk about what are the true retention rates that are going to have to be there, because you might write new business, but it might only result in 5% when you really take into account the revenue retention or the revenue loss that could happen from the market softening. So I think putting a realistic eye on things is really important in order to say, while you might think you want to grow 10%, if you can't write the new business to make up that gap, it truly might not be that 10% that you think it's going to be, right?
Yes. And I think also too, because we've been in a hard market for a little bit, a lot of agency owners view their business in terms of premium growth. Mm-hmm. That's great. But however, when now the rates are softening, you might have the same premium growth, but it won't translate into the same revenue if the rates aren't where they used to be. And that's I found one of the harder harder conversations, but more of a realization of, oh, I might have my premium growth, or my retention normally is pretty strong. It's about 95 or 99, but now that's premium, but how does that translate to your P&L? If you're same 95%, but now you're taking your commission rate from 15, let's just say, to 12, you're losing 3% of that rate on that premium. So your retention will be lower. And that's kind of a harder conversation this year, I've found, with a lot of the agency owners, because they do think in terms of premium, not necessarily in terms of revenue dollars when it comes to creating a budget, which is based on the revenue dollars.
So what other mistakes do you see in budgeting, or oversights? If you're doing this alone, what are some other things that you see any owner, as they're building a budget, might have an oversight and get caught by if they haven't gone through a good planning process.
I think not really taking a look at your larger clients and what's going on there. Is there a lost business that you're still receiving revenue on because maybe it's based on 12 months and then you're 6 months in and then the second half you won't be receiving it. So missing a lot of some of the larger lost business or accounts in particular. I found that it's interesting. We do create our budgets by vendor, a lot of details, especially the larger categories for expenses. And I find that some of that is very eye opening to the principals, because a lot of times, unlike in the old days when you used to have to sign every check so you knew where it was going, there's a lot of the vendors that are paid off of ACH, so they automatically go out the door, or credit cards, and there's no visibility on exactly who they're paying and what. And there might be smaller dollar amounts, but they do add up. And a lot of times we'll hear, oh, I have to look at that. I don't know why I'm paying for that. When did I start paying for that? They signed up for trial balance and all of a sudden they're paying for it. Similar to what, happens, I think, in our own personal lives. So I think not knowing where they're paying, also too, when you roll up your employees and how they're being paid and looking at the FTEs. And then as you translate back into the 10% revenue growth that you want, period, do you have the capacity to grow that without adding to your employees? A lot of times they just look at growth and don't think about the staffing that is needed. Or if you're investing in technology, what is happening? Is there efficiencies that are picking up where you might be able to utilize the technology instead of staffing to help with the 10% growth? Or if you have technology, a lot of people don't go back. It's fine that it's on the piece of paper and this is how much it costs, but do they actually audit it and say to themselves, I know we're paying for this, but are we utilizing it? Are we utilizing it the right way? Is this the right solution for us? What do we need to do? So I think creating the budgets help with those mistakes where maybe you purchased something for your agency that worked at the time, but it's not working now, or not knowing you're even paying for it, or looking at your staffing to support where you want to go with your growth. So they're probably the three biggest areas that I find that people don't take the time because, life just gets busy every day. You're just trying to write the business. You don't stop. And budgeting is a good time to take a breath and actually look at your organization as a whole and say, okay, what's working? What isn't working if I want to do this? And really taking a look at the line items that are making a difference to the bottom line.
It's so funny, Lisa, is we've been doing, in my role, right? I've been doing a lot of benchmarking with
Mm-hmm.
agencies. And throughout that process, one of the things that we do is upload their book of business, map their data to say, I'm looking at the right premium column, I'm looking at the right carrier column, all of those things. And then it automatically pulls up your top 10 carriers, your top 10 clients, and then like a percentage of personal, commercial, life, health, farm, like all that stuff. And there are so many agents that when we get to the client part, your top 10 clients, they're like, whoa, I didn't realize that Wallace Agency was that big of a client of ours. Is that right? Well, hang on, let me go to my AMS really fast. Okay, that's right. Well, wow, I didn't realize that McDonald's was that huge of a client of ours. McDonald's, that's not a real example that I've seen, but I think it's the same thing for your spending, right? Like
Mm-hmm.
when you're not having something you have to look at every day, sometimes you can think that the noisiest thing is the largest, but
Mm-hmm.
it's not. And I think it's a really good reminder for budgeting, for benchmarking, that you just have to like take a health check. Hey, what's going well? What's not going well? And just like have the knowledge of what are these things in my agency that are happening, right? Like as the
Mm-hmm.
owner, you should have your thumb on the pulse of that, and it's always a good wake up call when we start to review these things for sure.
And I think a mindset is always the status quo. So when people, it's easy just to roll from one year to the other. But you're at a different cycle for each year on how your organization is forming. So a lot of people just need to take a look as a whole rather than silos and say, where do I need the investment? Where can I pull back the investment because we've already passed that phase? And taking a look and saying, how do all these pieces play together? How do I get to be able to get a 10% growth based on where we are today and where I want to go? And where can I redirect items, dollars, or where do I need to invest other? And the other piece too is budgeting is much more than just the P&L. You also have to look at cash flow. I mean, because, you need to be able to breathe before you can survive, and cash is allowing you to be alive and breathe, and then you can figure out how to survive and succeed. So you really need, and not everything that is on your cash flow. So not everything dollars that go out the door ends up on your P&L. There's a lot of debt
That's right.
obligations. There's a lot of managing your AR, managing your payables. How does that all come into play? And really understanding, now the P&L is a big part of it because that's where hopefully most of your dollars are coming in from, your revenue source. But there's also other pieces that go out the door, and you need to have a good understanding on what is my profit for the year that'll help me make these other obligations, and what do those obligations look like, because I need to have the cash to basically continue.
Yeah, one of my presentations, Lisa, I actually use some of these terms and say, hey, here's the deal: profit doesn't equal cash.
Yes.
Revenue, like there's a lot of things that I think if you're not a financial person, you don't realize that. You don't think about, when I look at that P&L at the bottom, that is not what my cash flow is. That is just what the profit is. So I love that you're tying that in. And trust me, we'll be coming back and talking about cash flow, because I think for many of our agencies, especially those that are acquiring or those that are transitioning from one generation to another, cash flow is the thing we actually spend the more time on as a fractional CFO with them, because they're trying to get their arms around, what do I have the ability to continue to do, whether it is take over running an agency with the debt of actually buying the agency at the same time, or acquiring, et cetera. So trust me, you'll be a guest when we talk about cash flow, because you're an expert with 100%. But I do want to flip from, we talked about some mistakes, but what are some examples or even a story of somebody that was able to do something different because they had a budget? And the reason I'm asking this is sometimes people have in their minds that budgets are restrictive. In my mind, budgets actually give you the line of sight to make quicker and more informed decisions than if you didn't have a budget. So can you give me an example of someone you've worked with that was able to make a decision or take an action because they had the line of sight of having a budget in place?
Yeah, so I guess mainly a lot of that's going to be their strategy. So we sit down and we set the goals and say, okay, what do you foresee for this year as well as the next few years? Going out about 3-5 years, but in the short term, between now 1 to 3 years, what's going on, and we set the goals. Well, when we sit down and they're pleasantly surprised at where they can get to with their revenue, the success of what's going on, then it's like, okay, being able to staff for that growth and doing it at the right time is huge. And that's a big benefit because, one, you don't burn out the staff that's already there. You're not investing in someone too soon where you're overstaffed and you're taking away, and then there isn't that the distribution of capacity right away. So you're able to set the timing by budgeting the right time to enter a new person, the right time to reshift maybe a books of business. You're able to look at it and say, okay, well, my growth is coming from commercial lines, which is causing the growth, so I need to hire a commercial lines person, not just a body. It can't be personal lines. So I think the success I've found is understanding where your growth is coming from, the revenue, how quickly you can get it, and when to staff, and the capacity, because it saves the people that are there. And it also helps with growing in the right time and the right way.
Yeah. So staffing, the reality is staffing makes up 50% of the budget oftentimes. So making strong and solid decisions about hiring might be one of the most impactful things that an agency can have. Um, on the flip side, if compensation isn't set right,
Right.
it could actually be a really, really big inhibitor of your profitability. So give me an example of things that you've encountered by helping agencies through a budgeting process about compensation. Like what are some common challenges that you have seen agencies face in that category?
Not paying their producers correctly. I feel
Mm-hmm.
like they're, the commission rates of which they pay some of these producers prohibit the growth because a lot of times it's not helping the profit so that you then are paying the producer and don't have the funds to actually pay the support staff in order to support that book of business by having too high of commission rates going out the door. And a lot of times, you'll hear the principals say that they can't get a good quality producer in the door without paying these rates. But in the end, if you're paying them such a high commission rate and they're growing, that's great. But then you have to bring in the support staff. There's nothing left over. So there's so it's costing you money in the end to write that book of business. So the growth isn't profitable growth. It's just growth, which doesn't have the component of profitability. So I've seen that is very interesting, the wide varying commission rates that are out there. I mean, and I think it's great because a lot of times they focus on, am I growing, but not realizing is it good growth? Or I know no one would ever say there's bad growth, but unprofitable growth, is it really costing me money? Because it's not just what you're paying out to the producers that impact that line business. It's everything that's involved in order to get that book of business serviced, retained, brought in. So
Yeah.
yeah, the ROI sometimes on writing that book of business isn't always profitable, and that's very I think eye opening when you break it down and really have the conversation, because too often I think people just think of the growth and don't bring it all the way down to the profit. So,
Well, another thing with these crazy producer compensation structures that we see a lot of times, people don't think of the transferability of the book,
yeah.
right? So not only is it not profitable, but when you go to sell, right, which the only two options for an agency at the end of the day are to shut down or to sell. So we should all be prepping ourselves for sale at the end of the day. When an agency comes and looks at your agency to buy, if you have a crazy wackadoo producer compensation model, a
Mm-hmm.
buyer is either going to heavily discount your agency and need to restaff all your producers because they're starting from scratch, or they're going to say hell no and walk away. Like that, I think that's sometimes what people forget when they're like, "Oh, sorry, I have a really crazy producer compensation model, but it's working for me." What do you, like, it might be working for you today, but what
Yeah.
about when you go to change it, you lose all your producers, you lose your growth, and then you go to sell your agency because there is no growth because there's no one selling it. It's a tumble down the hill effect with some of these
Well,
crazy
and
compensation models.
yeah, the other part is it is really tough to fix someone's compensation right before a sale. So if you don't know that you are overcompensating, and let me give you an example. If you're, you know, a typical compensation structure for a producer is 45 new, 30 renewal. Let's just say. And I don't want to talk in hypotheticals, but I've had some agencies come to us paying 60% new, 50 renewal, or 50-50, or 80-30. Like I've had all kinds of different things. And the reason they're doing that is they're trying to minimize the salary they need to pay to get a producer's book of business to a level where they can be self-sufficient. I understand the reason why. But then they stay at that level for forever as the book grows, can't get the service people. But the other thing is a buyer is looking at it and saying, well, I can't have all these different comp structures. The other option, Lindsay, is they will pay you based on your profitability, and then they'll bring that producer in pay them the right compensation, and you won't get the differential in the profitability of the agency, but they will. If they're able to
Interesting.
keep your producers online on staff and keep that book intact and figure out either a deferred comp plan or something in order to keep that person with you, the seller actually didn't get the right amount of profit and they didn't get the value for their agency that they were looking for. So you don't want to leave money on the table. You do not want to have comp structures that are out of whack. You certainly don't want the retention of your book to decline because you lose staff in that transition. Compensation is one of the most sought out pieces of information when we're working with people, because if you don't get it right, it impacts 50% or more of your agency, and it doesn't allow you to have the freedom to invest in the things that might drive growth or might drive infrastructure and profitability and efficiency inside your agency. So I think knowing where you are from a budget standpoint, understanding that growth rate, but also the benchmarks for some of these categories becomes very insightful. So, Lisa, give me an example of when you go through a budgeting process and you explain the benchmarks based on the size of the agency, what decisions someone might start making if they're above a particular benchmark. Give me just an example of what that might look like.
Um, so if we realize that they're above it, the first conversation is to look to see what is made up of that expense category. Who are you paying and what are you paying for? And then we go through and ask the question, are any of these one-time events? Did you have so let's say they were way out of whack on professional fees and it was due to legal. Was that, are you defending a claim? Was that a lawsuit that happened? Are you looking to do something as far as acquisition goes? So taking a look to see if there's any one-time items that are in there that can be managed through. And then the other thing too is to take a look at as I said, who you're paying, what you're paying for. Was it effective? Do you need to continue to do that? Is it under a contract and you can't get rid of it? So asking the questions, is it meaningful to your agency now? And can we do anything? Is there contractual obligations to that it has to remain, or can you reduce it if it isn't effective? And are there any one time? So it's really understanding what is that cost doing for you as an organization to help you become effective, efficient, and profitable.
Yeah, fantastic. So I think we have definitely given some ideas about why having a budget makes a ton of sense. If somebody wanted to go through this process, is there, like, have they missed the window? If it's February and you don't have a budget, like, what does that look like, Lisa? What advice would you give to someone?
No, you should always, look, it's only February, so you have 1 month. The good thing is, that you have actuals for January. So now you're looking at 11 months and what's going on. Maybe it helps set the tone for what's going on for the rest of the year. But you should, it's never too late to have a budget. The other thing too is, I think it's important for people to understand that you set a budget based on what you know at that time. So you sat down, you looked at everything, and this is but if there's events that happen, it doesn't mean that it's set in stone. And the budget will never be perfect because, again, it's all based on estimates of what you know. It's a living and breathing document that you look at every month. It's important. You don't just set a budget, put it in your drawer and you move on, or save it in a folder. I know, Lindsay, I'm a paper person, but you need to, basically every month take a look at it. Are we tracking? What's going on? Where are we hitting and where are we missing the mark? And is there anything we can do to change course of action? Is this just a 1 month thing? Is it a timing thing? Or are we heading in a different direction? And then we need to reset that budget into a forecast to say, okay, looks like we're trending higher when it comes to, I don't know, payroll costs. So let's increase what we think the budget's going to be for that. So we're going to reforecast it to be the amount of level that we're spending currently. If we feel that we were very conservative with our retention and we thought we were going to get hit harder with it, and we had, I'm going to throw out a number, 80%, but we're really tracking more till 85. Well, let's look at that, reforecast that, that gives us a little bit more room. Is there anything that at the budget table we said we can't do because we didn't think our revenue level was going to be at a certain amount that we might want to now invest in because we have the funds to do so? So it's very important to not just set a budget and forget it. You need to look at it every month and compare it to where you're going, and make sure that you take the course of change the course of any area that you need to make sure that you're looking at a reasonable and realistic view of how your year is going to end up turning out. So I think it's very important. I think some people just think it's a budget season, and once we approve it, because I know it's very tedious, but once we're done, we're done. But no, it should be something that you manage through every month with your results to make sure that you know exactly what direction you're heading, and you're not surprised. All of a sudden, it's November, and it's like, okay, what are we doing? We didn't hit any of our targets. It should happen as you're going through each month. So
Awesome. Well, Lisa, thank you so much for joining us for your inaugural
thank you.
Business
Yes.
Refocused podcast. We really appreciated you taking time out of your very busy schedule to join us and share about budgeting. We'd love to have you back to talk about other various things you work on. You do so much for us and our agencies. It's time people learn from you just as much as they learn from both of us. So you'll definitely be back, returning guests on the podcast. But thank you so much.
No, thank you. I appreciate it.